So this module is talking about cash control and banking. So today we're going to talk about just cash control, following on page 480 to 492 of your textbook. I'm not going to go through this with you here of what we're going to learn today, but basically we're going to talk about cash control. When you have a company, it is really important that you have really a strong control of the cash that's going in and out of your company. And there's lots of places where people, or lots of opportunities where people could take some of your company's money. And in that case, you don't want that to happen. So you need to take some control over your cash to make sure that this doesn't happen. A good accounting system protects assets such as cash and ensures that accounting records are reliable and accurate. Internal accounting control for business refers to the method and procedure used. So we need to protect the assets from waste, loss, theft, and fraud. We need to ensure reliable accounting records, ensure accurate and consistent applications of the firm's policies, and evaluate the performance of departments and personnel. These components of an effective internal control system can be divided into two: administrative controls and accounting controls. So we have administrative controls, ensure accurate and consistent application of the company's policies, and ensure company policies are followed by employees. The accounting controls protect assets from waste, loss, and theft and fraud, and they ensure the reliability of accounting records and statements. Accountants must be familiar with both of these controls. Proper internal control ensures that the accounting system is dependable and effective and provides security for the resources of the business. So in this chapter, we will discuss one portion of the accounting control system of a business, the need for control cash. And we're going to talk about different procedures that are put in place to ensure that cash is being controlled. So cash control procedures are split into 8 different categories, and we're going to talk about all 8 of these quite quickly for you. So the first one is separation of duties. A key component of all control system is the separation of duties of employees to discourage fraud and theft, as well as to ensure the accuracy of accounting data. The duties of the accounting personnel should be arranged so that one employee verifies the accuracy of another employee's work. In a cash control system, it is important that the employee responsible for preparing and depositing the cash in the bank be different from the employee responsible for recording the cash receipts. This provides verification of the cash recorded and minimizes the chance of theft, since both employees would have to work together to remove cash from the company. The second is immediate listing of cash receipts. Cash receipts consist of cash received at the time of the sale, over the counter, payments made by debit card, and checks received by mail in payment of outstanding amounts. Cash registers or terminals are normally used to record cash sales as they occur. The cash register should be set up so the customer can see the amount recorded. The customer assists with the control system by preventing an error in recording a cash sale and by preventing the employee from ringing in a lower amount than charged to the customer and then pocketing the difference. The cash register tape provides a total of the cash sales for the day. It is compared to the actual cash receipts by the manager, supervisor, or the owner when preparing the daily cash proof. This allows a person other than the cashier to verify the accuracy of the cash. Okay, there's also pre-numbered sales slips. And so what happens there is that everything's pre-numbered. So if something's missing, they have to be able to go back and track it. If they make a mistake on the pre-numbered sales slip and they don't just tear it out and throw it away, they would have to mark the word void on it to show that it's there and a mistake was made, therefore there's no source document to go along with it. The employee who opens the mail should prepare a list of checks received. One copy of this list, along with the checks, is forwarded to the person responsible for making the daily deposit. The second copy is sent to the accounting department as a source document to record these cash receipts. In some firms, a third copy is kept on file for future reference by the employee opening the mail. These procedures ensure a separation in duties between your employees. Procedure 3 is you always need to make sure you have a daily cash proof. Each day, the owner or supervisor should balance the cash received against the source documents used to record the cash transactions. By preparing this proof daily, a major shortage or overage can be dealt with immediately. and introducing the cash short and over account. What happens sometimes is you make mistakes, and what we need to have an account to help us do that. The cash is counted and a $150 cash float is removed from the cash and kept in the next day's business. On June 6th, the cash is short 30 cents since the company has lost funds. An expense must be recorded called the cash short and over account. So it looks like this. This daily proof on the 6th, cash was short 30 cents. And it would be recorded like this. However, on June 7th, there is a cash over of $1. And it would be, the daily proof would look like this with the cash over there. The general journal entry would look like this. Okay, so just shows that why that money was out a little bit. A company that handles many cash transactions and prepares daily cash proof is faced with a problem. What should be done about shortages and overages? These are several possibilities, including absorb all the shortages and overages and deduct shortages from the cashier's pay. So if it happens all the time and it's for large amounts, they might want to start talking to the cashier about how she's handling the money and making mistakes, giving change back and so forth. Or if it's a little amount, the company can just say, hey, that happens, and we will just absorb that. Procedure 4 is a daily deposit of cash. Each day, the total cash receipts of the business should be deposited in the bank. Therefore, no large amounts of money are kept on the premises. No bills should be paid out of these funds. Thus, the amount of the deposit each day will be the same as the amount recorded in the cash receipts journal by the accounting department. This allows a further verification of the records by the company's bank. So a deposit slip would look like this. It shows how that money was, how we came about that total. Beta Enterprises cash receipts control system. So this is just an example of how they would use this. I don't know if I need to go through that with you. What it's basically talking about is when cash is being deposited, it goes through 4 different hands. The person who's counting it, the person who takes it to the bank, and then it goes to the accounts receivable clerk and the duties of the accountant. So it's going through 4 different hands. Therefore, no money can go missing in the meantime. Okay. So that's just a flow chart there that shows how things have been split up. Okay, talks about the separation of duties there as well. And procedure 5 is sometimes you need to obviously make a payment by check, and all cash payments should be made by check. The exception is small bills paid out of petty cash, to be discussed on the next page. Checks are pre-numbered, and spoiled checks should be marked void if a mistake was made. Therefore, all checks can be accounted for at any time. It is important that company checks be kept in a safe place to prevent theft. Supporting documents. You can't write a check unless you have a document or a source document to show why you're writing that check. Petty cash procedures. It's often necessary to make a payment using currency because the amount involved is small or because a check is not acceptable. Like you're paying for a parcel that is cash on delivery, $1.50. Shortage of postage on incoming mail, 50 cents. You have a taxi charge for a rush order of supplies for 15, a payment for office supplies, $12. To address these situations, a small amount of cash is kept on hand. This petty cash fund is given to one person, the petty cashier, to maintain. The petty cashier usually has no connection with the accounting system of the company. So to establish the petty cash fund, a check is issued and given to the petty cashier. The check is cashed and the money is usually kept in a petty cash box. When a petty cash fund is established, the journal entry would look like this. So they're setting it up. They're taking out $100 cash and keeping it to pay for the little things that come up. Now, if the petty cashier is the only person who handles petty cash, payments made must be authorized by a properly supported petty cash voucher. So it's showing here what the date is, the amount, and what it was for, and what it's being charged to there, what account. Approving petty cash, need to make sure that they have all the supporting bills to show that how they've used that money. Sometimes the petty cash fund will eventually run low, so you need to replenish it. Shows here the journal entry made each time the petty cash fund is replenished. The accounts to be debited are determined by referring to the vouchers and the summary submitted by the petty cash. Notice that expense accounts are debited each time the fund is replenished. The petty cash account is used only when the fund is established or the size of the fund has been changed. Okay, so the petty cashier cashes the $88 check, obtaining the variety of denominations and bills to pay for this stuff up here. And the petty cash guidelines here, the amount of the fund is 100 and approved vouchers required for repayment. Replenish the fund when the cash level reaches $10 or lower. The maximum for any one payment is 15. Anything over 15, this company would write a check. And approved vouchers together with receipts must be presented to the accountant when requesting a replenishing check. Sometimes you want to change the size of the petty cash, which can be done really easily as well, as long as it's recorded. And here's another example as well. Okay, so you can see that cash is really, really important, and we need to make sure that we're following all of the steps to make sure that nothing goes missing.